What's up, everybody? Michael Silva here. What just happened to the stock market? That was a big, massive move. We're going to talk about that in today's stock market brief. We're going to be looking at longer-term charts and kind of zooming in all the way to the 15. So we're going to go monthly, weekly, and then we're going to just zoom right into the 15, go over some stock market indicators here as well. So as you see, today we had some more earnings come out. Meta was up 14%, and you can see communications was the leading sector, up 5.81. Everything across the board had a massive day today. The NASDAQ composite was up 2.43%. S&P 500 up 2%. Massive trend day. Now, if we take a look at ES on the daily time frame, we did break down through that 4,100 level that we've been watching out for, but we're still right in the middle of all of this chop box, so that's something to pay attention to. Now, just the other day before this massive move, right, when we're right over here, what did these zones look like? Well, the zones were telling us something. The zones, it was all lighting up green. So when it's all green, that means everything's approaching the lower end of the zone. And if you see here, the VIX was red. When the VIX is red, it's telling us volatility is at the higher end of its zone. So what that tells us is, hey, this isn't the place to short. Most likely we can see a bounce. And I put that together on a Twitter feed, Twitter thread, because I couldn't make out a movie the other day. So hopefully you saw that, and this was all yesterday's, and now take a look at how quickly it changed back over here. So it's more neutralized, and you can see the S&P 500, the middle of the range for the SPX is at 4118, and we closed back above that, which is more of a bullish sign, but there are still some signals. You can even take a look at the S&P 100 now. Everything's lighting back up red. It's mainly this big mover in the stock market overall, which is very important to note. It's the big tech stocks that started ripping up higher, leaving a lot of other equities kind of in the dust. Now, if we take a look here at the monthly time frame, yeah, the day looked really good, but how's the month looking overall? Well, we're up 0.63%. So, right, we've been chopping around for quite some time. We saw a nice big good day today, but we're overall up 6.3%. You can see where we bounced from was actually the monthly 5 EMA as it's slowly inclining. So if we give that up, it tells me that there could be some more downside there in the S&P 500. If you take a look at the Qs, where are we? Well, we're actually down month to date for the Qs overall with an indecision type candle currently with, I believe, one more trading day left in the month. And then the IWM, where it's down actually 2.65%, well beneath that 5 EMA on the monthly time frame. So in order to be more bullish we'd want to see price get back above that level. How about week to date for the S&P 500, where we were down all the way over here at 40.50. We came back up mainly today, and you can see, well, we're actually flat on the week. So despite seeing this massive move, we're flat. That's all we've been doing. We're unchanged for the overall week, putting in a indecision candle. So we'll see how that all resolves itself. But we are above that 5 EMA as it stands for right now on the weekly time frame. You can take a look here. We got above that 1.2 on back month versus front month volatility. The last times we've kind of came into that range, we've seen it mark the tops of some of these bear market rallies. And you can see we're approaching back up into that level today after today's move. And you can see when we got there, the market actually came off these last couple of days, and now we're seeing a little bit of a rally held by those big mega cap names. You take a look over here on the summation index, we still have the parabolic star ticking up with a negative divergence, so this is identifying a potential change in trend as it stands right now. Same with the NYSE summation index, identifying a potential change in trend over here. Take a look at the 10-year yield today, up 2.8%. So typically when you see moves like this on the 10-year yield, it's actually not good for growth names, but needless to say, we saw a lot of order flow that was really bullish today, and we saw those big mega cap stocks obviously rip higher. If you take a look at bonds, that actually came off quite a bit, but it's been overall in a sideways consolidation. So me personally thinking that we're going to be going into stage one of the economic cycle, business cycle. That's where we move into contractionary phase in the economy, and that says stocks and commodities typically go down and bonds typically go up. So as long as this holds, this is basing out, and we're holding this area or bouncing back down into this area, I still feel like could be a good opportunity as the trend was clearly down here. Now it's more neutralized, so this could be more of a stage one accumulation, right? There's a stage 4 over here is in decline. We could be in stage 1 accumulation, and eventually if we break out of this box over here and the moving averages start curling up, that could be stage 2, which is known as a markup phase. Let's continue on and look at the 15-minute time frame. So yes, today, what happened? Well, we gapped up back inside. So if you looked at the Twitter thread that I put together yesterday, we had a positive divergence first, okay? Positive divergence. We were below the weekly expected move, which we haven't tagged for 3 weeks. Okay, so it looked like a bounce was possible. Did I think that the bounce like this was going to take place? Absolutely not. But what happened was we came outside of the daily expected move. Okay, and then I started notifying out on the Discord group, basically saying, hey, watch for price to potentially pull back, because what happens that we've seen on these daily expected moves is if it breaks above it and it holds a support, we've seen it flip into a level of support prior, is what I'm trying to say. And that actually it was right here, and we started pretty much, we didn't reach all the way back down to it, but we started ripping up higher. We got a little caught up there at the 5-day moving average, but now we're well above it. So overall, yeah, pretty much unchanged on the week. RSI is getting overbought conditions, a very strong move. It's probably going to need a digest. I wouldn't be chasing a move like this by any means. So what could potentially happen here? Well, in short term, bulls are back in control, right? So that it took one day, right? We started breaking down. Now we're right back up. Overall, still a neutral trend, but the 5-day is going to start potentially curling up here as long as price can stay. So if price comes all the way back down to the daily expected move, watch for the week-to-date moving average to come back up, watch for the 5-day moving average to come back up, potentially the month-to-date anchored VWAP too to hold as a level of support. So even if we get a sell-off, we may see still a potential bounce in that area at some point to start heading back up higher, okay? So yes, bulls are back in control. If you want to be more bearish, well, obviously, if we start taking out the low of today, that would be pretty bearish, and then we'd obviously look for the gap fill, would be another level to look. If you guys want to take a look at all the expected moves, I'll go ahead and share them. This is what I share typically just on the Discord group, but because I've been gone on vacation, I'll share these with you. These are the 2 sigma levels for these products, and then we have the upper and lower levels for the daily expected moves. The daily expected move today, by the way, was basically a 3 sigma move. So very rare occurrence, but it happened. So we got to be careful out there, because we still have a lot of things taking place kind of under the surface. And if these S&P 100 top dogs, right, these mega cap names start to give way, it can still bring, obviously, the S&P 500 right back down to a more neutralized state. That's all I got for you on today's episode, everybody. Have a wonderful